Alright, so now let's look at the next part of recognition and measurement. So now we're going to look at the measurement. Okay, so for the initial measurement, alright, for initial measurement, so here we are talking about the initial measurement. So the first time you incur the cost to get the item of intangible asset, okay, so how do we measure the item? Let's say, for example, the item that you acquire met the definition, okay, met the recognition of intangible asset, but then how much should you record as intangible asset? Okay, for the first time, an intangible asset shall be measured initially at cost. Okay, so you measure at cost. Alright, so I hope you still remember what does it mean by cost. Cost can be cash, it can be cash equivalent, it can be fair value, depending on the situation. How did you acquire the intangible asset? Alright, okay, so in the cost of intangible asset, okay, the cost of intangible asset here consists of the sum of expenditure incurred from the date when the intangible asset first meets the recognition criteria. Okay, so all costs that you have incurred, okay, starting from, okay, the intangible asset meets the recognition criteria. Okay, all costs that you have incurred, right, can be capitalized as intangible asset. Okay, alright, so again, cost, okay, cost can be cash, it can be cash equivalent, it can be fair value. Alright, so why there is a difference here? Okay, why there is a difference in recording the cost? It depends on the situation, on how you acquire, okay, on how you generate the intangible asset. Alright, so there are a few situations that we are going to discuss here. So the first one is separate acquisition, alright, or acquired in a business combination, acquired by way of government grant, exchange of asset, internally generated goodwill, and internally generated intangible asset. Okay, so we are going to discuss one by one. Alright, so for separate acquisition, meaning that for intangible asset that you purchase, okay, or the one that you acquire, okay, the cost of a separately acquired intangible asset comprise number one, okay, this one will be similar to the elements of cost of PPE. Okay, so number one, purchase price including import duty, non-refundable purchase tax after you deduct trade discount and rebate. Alright, similar to the three elements of cost in MFRS 116. B. Any directly attributable cost of preparing the asset for its intended use. Okay. Alright. So examples of the cost, examples of direct costs. Okay, to bring the asset, to prepare the asset for its intended use, you may refer to MFRS 138, para 28 and 29. Okay. Right, so examples of directly attributable costs, okay, of an intangible asset are cost of employee benefits, cost of employee benefits to bring the asset to its working condition, to bring the asset to its working condition. Alright, and then professional fees, okay, professional fees, okay, to bring the asset to its working condition. Okay, for a certain registration, for example patent, okay, I was informed before that, okay, the registration of patent would take you a very long time because you have to prove that, okay, your design is different from the other design. Okay, all the methods that you try to patent, okay, are different from the other methods. Okay, and sometimes we need to hire a professionals, okay, just to fill up the form, because we have to come up with a certain documentation to show the evidence or to prove that, okay, this is the first ever in the world. All right. Okay. And then the cost of testing. Okay, so testing costs. All right, examples of expenditure that are not part. Okay, so let's look at the next one. Okay, this one is not part, all right, of the cost of an intangible asset. So if you have this cost, then you do not include in the computation of the initial cost of intangible asset. All right. So examples number 1, okay, cost of introducing new product. Cost of introducing new product, including cost of advertising, promotional activities. Usually we expense of in SOPL. Okay, staff training, no. Okay, conducting business in new location, new class of customer, so this is no. Admin and other general overhead costs. Okay, so this is no. Okay, not to be included. All right. Okay, so let's go back to our note. Okay. Okay, recognition says when the asset is in the condition necessary for it to be capable of operating in the manner intended by management. Okay, so throughout the process of acquiring the intangible asset, okay, throughout the process, because the process may take you more than 1 day, it could be 1 month, it could be 1 year. So the whole process, okay, the whole process, okay, every cost that you have incurred throughout the process can be capitalized up to the point, okay, up to the point when the asset is ready to be used. Let's say, for example, after you receive the legal rights over the patents, okay, saying that you are the owner of this method, you are the owner of this design, all right, okay, and the asset is ready to be used by the production line, okay, then you have to stop capitalizing the costs. Okay, any cost that you incur after that is to be expense of in SOPL. Okay, all right. The income and related expenses of incidental operation occur before or during the development activities are recognized immediately in profit or loss. Okay, so income and related expense of incidental operation occur before or during the development activities are to be recognized in profit or loss. Okay, all right, so let's look at one example here. Right, on 1st January 2015, Moon Berhad acquired publishing right at a cost of 500,000 and a legal life of 10 years. Okay, meaning that within this 10 years period, okay, no one can use the same right. Right. Okay, so the accounting treatment, discuss about the accounting treatment. Okay, what about the recognition? Can we recognize the publishing right as, okay, intangible asset? Publishing right is recognized as an intangible asset because it is identifiable, controllable, and probable that future economic benefit will flow to the entity. Okay, all right, and then okay, and then the publishing right will be measured at, okay, at cost of 500,000 and to be amortized over a legal life of 10 years. All right, so amortized will be similar to depreciation. Okay, next. All right, what about the intangible asset that you acquire in a business combination? Okay, you acquire, you get this intangible asset through the business combination. Okay, you did not acquire separately, but the intangible asset comes together with the business combination. Okay, so the cost of the intangible asset, okay, let's say, for example, after you combine the business, all right, from that combination you are able to identify, all right, the intangible asset, okay, out of total money that you have incurred in the business combination process. Okay, so there are part of it that relates to intangible asset. Okay, so how to record the intangible asset? Okay, the cost will be the fair value of intangible asset at the date of acquisition. Okay, so the fair value here is referring to the market price in an active market. Okay, the market price in an active market. Okay, right, government grant. Okay, intangible asset received by way of government grant. Alright, so how do we record our intangible asset? For example, you receive airport landing right, license to operate radio, okay, import license, quota, or right to access other restricted resources, especially for mining, oil and gas. Alright, okay, so for the asset that you receive by way of government grant, right, so how do we record in our books of account? Okay, are recorded at fair value or nominal amount plus any direct expenses incurred in preparing the asset for its intended use. Okay, fair value or nominal amount, okay, plus any direct expenses incurred in preparing the asset for its intended use. Okay, so let's look at one example here. Syarikat Federal has been granted a license from Perak governments to operate mining quarry for 5 years period in Bidor on 1st September 2014. The fair value of license was 5 million. Okay, alright, so discuss about the recognition. Okay, discuss whether we can recognize, okay, the license, okay, whether we can recognize the license as intangible asset. License is recognized as intangible asset because it is identifiable, controllable, and probable that future economic benefit will flow to the entity. The intangible asset will be measured initially at the fair value of 5 million and it's going to be amortized over the useful life of 5 years. Okay, or it is going to be measured at nominal amount plus any expenditure incurred in preparing asset for its intended use. Okay, however, in this case we have the evidence of fair value, so we are going to use the fair value. Okay, what about exchange of asset? Okay, we are going to exchange intangible asset with another asset. So how do we record, okay, the intangible asset received? Alright, so to record the intangible asset received, okay, the cost of intangible asset is to be measured at fair value. Okay, the cost of intangible asset is to be measured at fair value. Okay, if an entity is able to measure reliably the fair value of either the asset received or the asset given up, then the fair value of the asset given up is used to measure the cost, unless the fair value of asset received is more clearly evident. Alright, so the first rule is to use the fair value, okay, to use the fair value of asset given up, unless, okay, the fair value of asset received is more clearly evident. Then we are going to use the fair value of asset received. Therefore, in this case, for the exchange of asset, we are going to record the asset that we receive at its fair value. Okay, the asset that we receive at its fair value, but of which asset's fair value of asset given up, unless the asset received fair value is more clearly evident. Okay. Alright, what if intangible asset lacks of commercial substance, alright, and the fair value is unable to be measured reliably? Then we are going to substitute the fair value with the carrying amount of asset given up. Okay, we are going to substitute the fair value with the carrying amount of the intangible asset given up. Again, alright, why asset given up? Because, alright, because we do have the records about the carrying amount, okay, of intangible asset given up. Alright, we don't have, or we don't know the carrying amount of intangible asset that we receive, but we do have the records for the asset given up. Alright, so if it is lack of commercial substance, alright, or the fair value is unable to be measured reliably, then we are going to use the carrying amount. Okay. In the process of exchange of asset, meaning we are going to receive an asset, then we are going to give up our asset. Alright, so the asset given up, okay, the asset given up, we have to record the derecognition of asset given up. Alright, so from the process of asset given up, if there is any gain or loss on disposal, okay, it is to be recognized in SOPL. It is to be recognized in SOPL. Okay.